Time now for business here on France 24, for which I'm joined by Owen Fairclough. Good morning to you, Owen. Starting off with another downgrade of sorts for Spain.
Yeah, it's not one of the big three, Chris. Not Moody's, Fitch, nor Fitch, but one of the lesser-known credit ratings agencies. EGAN has lowered Spain's Spain's credit rating to well below investment grade. All of that, of course, on the day and the week that Spain finds itself right in the eye of the debt storm. And that's been enough to send the markets into a spin, particularly in Madrid, where the IBEX has opened and is now more than 2% down. The rest of the markets following it down as well. The DAX even, which has had a pretty good showing this week, despite all this, is also in the red, as you can see. On the Asian markets as well, a similar kind of picture, though the Nikkei did manage to reverse some of its losses through the day's trade to finish the day around 0.2% down, but the Hang Seng took the brunt of the day's losses, around 2% down, or just under.
Okay, well, shares in Spanish bank Bankia losing another 6% at opening. It's been part nationalised to stop it going bust, but there are fears the Spanish government's taken on too much and needs the European Central Bank's help with a €23 million recapitalisation. Problem is the ECB isn't playing ball.
There will be no backdoor bailout for Spain's troubled Bankia. The centre-right government had hoped to fund a recapitalisation of the bank, which is crippled by bad debts, with €19 billion of sovereign bonds to be later redeemable in cash at the European Central Bank. Mariano Rajoy's government insisted it was not a bailout, but the European Central Bank disagreed. It flatly rejected the plan as unacceptable. One of its policymakers said it was outside the ECB's remit.
We have to be aware that rescuing banks is the responsibility of national governments. The role of the ECB is in the field of liquidity and not solvency.
Bankia was formed last year from a fusion of 7 savings banks and nationalised at a cost of €23.5 billion. But it turned out the new company had serious losses. Now the Spanish government finds itself having to step in when it has little money to spare.
In 2008, the governments of the United States and Great Britain fixed the financial system by injecting public money into banks. In Spain, we've let 5 years go by before doing it, and now finally money is going into financial institutions. What we're seeing now is a delayed reaction from an impact we should have felt years ago.
Market confidence in Spain has also taken a battering. The country's 10-year borrowing costs were at 6.44% on Tuesday, perilously close to the levels which drove Ireland and Greece to seek bailouts. Spain's foreign minister said a decision on how to deal with the losses in the banking sector as a whole would be taken after an external audit in June.
So that's the picture with Bankia. I can tell you that Spain's borrowing costs have risen again this morning, nudging up towards the 6.5% mark for 10-year bonds. A little earlier, we asked our correspondent in Madrid, Sarah Morris, whether all this now means that a bailout for Spain is inevitable.
Well, the government has insisted as late as this week that it can do it on its own, and that it has a plan in place to recapitalise its banks and also to look after its regions, which are also in a lot of debt. But the numbers are there and they are concerning, and people here are starting to ask themselves, does the government have the kind of strategy that will be needed to raise this kind of money? The government has said until very recently, as recently as February, it was saying that the banks would not need any money at all. And then the government came out recently with a figure of €15 billion. And then, of course, the first bank that did need this kind of state injection of money came out and is needing €23.5 billion.
Sarah Morris talking to us earlier from Madrid, just while we're staying with the whole Eurozone crisis. Worth noting that it's Italy's turn to step into the debt markets this Wednesday. Mario Monti's government will attempt to raise around €6.2 billion in 5 and 10-year bonds. Italy, Chris, has perhaps hidden from this debt storm a little bit in the past couple of weeks. It's all been about Spain. Make no mistake, Italy isn't far behind in terms of its borrowing costs rising and, of course, its debts and the amounts it costs to service those debts.
Yeah, who's next? Okay, more of the day's company news now, and BlackBerry maker Research in Motion is expecting to make its first operating loss in 8 years. The Canadian firm made the warning in an unexpected trading statement as it confirmed it's appointed two investment banks to help with its current restructuring. IM shares fell 8% in after-hours trading. Its value has collapsed more than 70% over the last year in the face of Apple's huge growth.
French channel TF1 has been ordered to pay €80,000 in costs after losing a court battle against YouTube. TF1 sued the website, claiming it had no right to commercial rights to carry TF1 material. But YouTube successfully argued it was not responsible for TF1 content posted on the site. The channel was also unable to prove any loss of sales linked to YouTube.
And shale gas production risks growing by just 1% over the next 20 years if its full potential isn't exploited. That's a worst-case scenario drawn up by the International Energy Agency. This is a golden age of gas will result in gas production tripling by 2035. But underinvestment would leave gas enjoying only 22% of global energy output.
Now then, I think if my net worth was reduced by $2 billion, I'd like to think I'd notice. But
Depends what it was in the first place.
I was just about to say, let's face it, I'm never going to be worth $2 billion. Mark Zuckerberg was worth nearly $20 billion, and yet the performance of Facebook's shares since it listed in that huge flotation on the 18th of May means that he is now worth just a little bit less than he was, with Facebook's shares now 20% down since their debut.
It has been dogged from the start by controversy and teething problems. Facebook's mammoth share offering continues in free fall. Facebook stock was the second most traded in US exchanges on Tuesday, hitting a new low before finishing off 9.6% down at $28.84. The latest squeeze was prompted partly by news Facebook was in discussions to buy Oslo-based Opera Software. Competition with Google and other tech giants could push the price tag of any deal with the mobile browser maker above €1 billion. Facebook's floating on May 18th was one of the most anticipated IPOs in years, but it was shrouded in controversy, with an overwhelmed Nasdaq failing to process many sales for an unprecedented 2 hours. The share price has since slumped 17% from the original $38 offering. Facebook and its underwriters, including Morgan Stanley, also face lawsuits from investors after it emerged the underwriters had withheld less positive projections.
That's it for business. Our thanks to Owen Fairclough. Just a quick reminder of some world news coming in now, and the Chinese following the Russians in restating their opposition to military intervention in Syria. This amid growing diplomatic pressure from other powers on Damascus over that massacre in Hula last week. Do stay with us here on Live from Paris. Stuart Norville will be back with more news very soon.
Today on France 24, an exclusive interview with Iranian President Mahmoud Ahmadinejad. Questions range from Iran's controversial nuclear program to Kofi Annan's plan for Syria and government domestic policies. Don't miss this exceptional interview live from Tehran, today from 6 p.m. Paris time on France 24.